All right, Craig, thank you so much for sitting down with me today. We're coming up to the end of the year and we have a lot of tailwinds going into 2024. Obviously, one of the biggest catalysts for the crypto market over the last few months has been around the ETF, and you are such a key player at Grayscale in that narrative. Give me an update on, we know that you've been meeting with the SEC and hearing a lot more about their engagement with the industry. Give me an update.
Absolutely. So it's great to be here with you tonight at the Blockchain Association Policy Summit in DC. Following our lawsuit victory back in August, where a DC Circuit Court panel of 3 judges agreed with our case that if the commission is okay with Bitcoin futures, then they should be treating spot Bitcoin ETFs the same. We've seen very good progress on the SEC front ourselves as well as other applicants. So right now, we're back in front of Trading and Markets. That's a division of the SEC that reviews the Form 19B4 application that would uplist our product, Grayscale Bitcoin Trust, GBTC, onto the New York Stock Exchange. So seeing a lot of good engagement there. Also on the corporation finance side of the SEC, who reviews disclosures, we filed something called an S3, which is what would register GBTC under the 33 Act. That's one of the other requirements in order for it to operate as an ETF. Seeing really good progress there. We filed an initial filing and have since filed an amendment to that, just updating disclosures based on comments we got from corporation finance. So a lot of good constructive engagement from the SEC. We feel really good about spot Bitcoin ETFs happening. It's a matter of when at this point, not a matter of if anymore.
Yeah, it really does seem like, I don't know that it's fully priced in or anything, but there seems to be a lot of confidence that it is a matter of when and not if. We hear a lot about Ether ETFs now, and several funds have come out, saying that they've got applications in to launch an Ether ETF when, things are in place to allow that. What are the prospects, as you see it, for ETFs around other crypto assets, like Solana, for example?
Yeah, so I think with Ethereum, at this point in time, you have very similar facts and circumstances as it relates to ETFs as you do for Bitcoin. We now have CME traded Ethereum futures. That is a regulated and surveilled market for Ethereum. And that really has shown to be one of the key thresholds in order to get the commission comfortable with an ETF product. We now have ETH futures ETFs that started trading in the US. That was back in October. And actually on that very same day when that product started trading, we filed to convert our other product, Grayscale Ethereum Trust, ETHE, into a spot Ethereum ETF. The reason why we did that is because our view, like it was for Bitcoin, is that if the commission is okay with Ethereum futures, they now should be comfortable with spot Ethereum ETFs. So that is a 19B4 filing that we now have out as well, and that'll come due sometime next year.
How do you see performance changing for these derivatives-based ETFs, given that we hear so much about how superior these spot ETFs will be to, say, the Bitcoin futures or the ETF or the Ether futures ETFs? What do you see happening to activity in the derivatives-based funds later?
Yeah, I think it's a question of what product structure is better for what particular investor. There are certain those that would like to access the markets through a futures-based product, but we feel that all else equal, the spot versions of the products are really more efficient and therefore better for investors. And the reason for that is because you're holding the actual asset itself, as opposed to holding a future, which comes with additional costs like rolling month to month. Mm-hmm. With the spot version of the product, you're just holding the asset in custody, and therefore that minimizes costs and ultimately is better for the end investor.
Regulation has been one of the biggest themes of this year. It looks like that's going to remain the case going into 2024. Do you see it as more of a headwind or a tailwind for the crypto market? Obviously, whatever happens with a Bitcoin ETF and when we finally get to see that is going to be a great thing for the industry and for the market. There's a lot at play, though, in terms of the state of regulation in crypto. What's your outlook?
Yeah, so with the spot Bitcoin ETF, that is a really good positive step forward for regulation over Bitcoin and really over crypto, because what you're doing is bringing the largest digital asset further into the regulatory perimeter by having it trade on a national securities exchange with regulation and surveillance. And I think that'll be really progressive for the whole industry. But in terms of regulation, we're often talking about more regulatory clarity. That's something that we think we have been able to get through the courts with our lawsuit and other lawsuits that are playing out. But for the long term, we really have to look to Congress for legislation that'll bring even more clarity for the industry overall. So right now, there's 2 bills that have passed the House Financial Services Committee and House Agriculture Committee for the first time. There's a bill called the Financial Innovation and Technology for the 21st Century Bill, or the FIT 21 bill. You can think of that based on the substance, which is to focus on digital asset market structure. That is things like how we regulate custodians and exchanges and brokers and dealers. How do we classify certain assets as commodities versus securities? That's the kind of comprehensive legislation that we need to bring this industry forward. The other bill is a stablecoin bill, which focuses on a very prominent and really easy to understand use case in crypto that I think a lot of members of Congress are very readily able to grasp. So both of those bills have made it through committee, and that's the first time we've ever seen that. So that is a huge amount of progress that happened for the industry. Next steps there, they get voted at the House and then make their way up to Senate. Unclear whether it'll ultimately pass in this Congress or next, but definitely a good development.
Yeah, it's a really long and tedious process, and it sounds like there's a little bit more urgency behind the stablecoin bill. Maybe not so much urgency, but it seems like the market structure bill is just a lot more complex. What would get in the way? Like, why wouldn't one of them pass in 2024?
I think I agree with your analysis that the stablecoin bill is just simpler, it's easier to comprehend, and therefore, all else equal, you would think it would have a smoother time passing versus the market structure bill, which has a lot more components and is a lot more comprehensive. I think at this point, crypto has proven to be a nonpartisan issue, and you have members on both sides of the aisle that really want to see legislation pass. There's a lot of factors that play. Next year is an election year, and there's going to be a lot of other things to think about. But I'm optimistic that eventually we will see this, but I don't know if it'll be next year or the year after.
Obviously, crypto has been asking for clear rules of the road for so long, and it seems like, even though there's a ways to go, regulators are more engaged with the industry than they've ever been, which is a good thing. Do you see that engagement kind of dropping off later in the year, next year, because it's an election year and other campaign priorities will start to rise to the top a little bit more?
I think quite the contrary. You're seeing a lot of candidates right now come out with statements about Bitcoin and crypto. And crypto, as I mentioned, is a nonpartisan issue because on the Democratic side, a lot of folks see the benefits of financial inclusion and democratizing finance, whereas on the Republican side, those folks see the benefits of open markets and removing intermediaries and reducing costs. So I think there's value that both sides of the aisle see to it, and we have seen some candidates come out with explicit statements about where they think the industry should be going. So I take a lot of hope from that.
Do you think it comes up as an issue next year in November? I think, we talked to a lot of crypto insiders, the two of us, but I think to most people sitting on the outside, it kind of looks like there are just so many more important things than this very young, nascent industry that, it really is early. So I think perspective is interesting because we have come so far, but to most people, it's still so early in the game.
I think that's a reason why it should and can be a topic of discussion, because it is very early, but it's also an opportunity that we don't want to squander by having other parts of the world be the first mover on that. I often think about how fortunate we are that Silicon Valley is in the US and we've received all the benefits of that wave of technology and innovation. And I think a lot of candidates and policymakers really want to make sure that the Silicon Valley of this industry can also be here in the US. So for me, I think it is definitely a topic that will come up in the election. So we'll have to see, in 2024.
Okay, so there's a lot of positive momentum and there's a lot of engagement. What are sort of the three main things you're watching in 2024 as far as the crypto regulation?
Yeah, so the ETF matter is the number one focus for us right now, allowing GBTC to uplist to NYSE Arca, seeing really good progress with the SEC on that and looking forward to more constructive engagement with them. The election is definitely something that we're going to be closely watching. And then there are some matters in the courts that are still playing out that I think will also bring regulatory clarity. So I'd say those are the three main things.
Is it another year of regulation by enforcement for, the ETF narrative seems like a separate thing now from many of the crypto native startups that may still be under immense scrutiny by regulators next year?
I think it'll be a continuation of how different regulators have been approaching the industry in the absence of having clear legislation over things like what assets are securities versus commodities, how should market participants be regulated. I imagine it will be more of the same. From our perspective, we are seeing good engagement from the SEC at this point, and so that's really what we're focused on.